Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we're going to be providing a long overdue update on Tenet Fintech Group. This is a company that we initially covered about 6 months back on the channel, and they actually just came out with their fiscal year end for 2021 results earlier this week. Now the company is trading down huge, about 30% after this news, so I wanted to go in here and give you guys an update on my outlook for this company moving into the back half of 2022. Now before we get into it, please take a second, hit the like button, you guys. It's a huge help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to do so. And let me know in the comment section below what you thought about Tenet's earnings, if you're currently holding shares, and how you think they stack up to some of the other players in this space. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we're going to be providing an update on Tenet Fintech Group Incorporated, previously known as Peak Fintech, trades under the ticker symbol PKK on the Canadian Securities Exchange. And as you can see, this is as of close on Tuesday, May 3rd. They had an absolutely horrible day. They were down 30% per share, or $1.48 per share Canadian, to close out at $3.39, and giving this company a market cap now sub $300 million Canadian. Now this downward move comes on the back of their earnings release. So they just put out earnings for fiscal year 2021. They missed on a number of fronts that we're going to talk about in today's presentation. And if we look at the chart over the last 6 months, Tenet was trading over $11 per share Canadian back in the start of November of 2021. They actually bottomed out at about $3.10 Canadian. They were starting to make an upward move here throughout March and April, and absolutely fell off a cliff again on May 3rd as a direct result of the earnings that came out on May 2nd. And that's exactly what we're going to focus on in today's presentation. Now with that being said, and for those of you who maybe missed our initial coverage on Peak Fintech Group, or as they are now known, Tenet Fintech Group, this is a company that's really focused on small and micro business lending, primarily in China. Now we're going to see for 2022, they're really focused on launching their business hub solution here in Canada, but the company really grew up focused on the Chinese market. Now in summary, Tenet Group is really focused on lending to small and micro businesses, which for a long time has been a scary proposition for banks and other lending institutions in China for a number of reasons that we actually talked about in our initial coverage. But Tenet Group is changing that by using AI and analytics to help any lender virtually eliminate the risks associated with lending to small and micro businesses. Through its Cubular Lending Hub ecosystem, Tenet Fintech Group, again formerly known as Peak Fintech Group, automates the process by which lenders find and qualify borrowers across several market verticals. These services allow banks and lenders to safely increase loan volumes, contributing to the efficiency of China's commercial lending industry. And as we're going to talk about in a second, they're now looking to bring that technology to North America as well. So the company really manages a group of commercial lending players within the ecosystem, so whether that's lenders, brokers, or the actual borrowers, where transactions are conducted securely and efficiently. And in terms of how they actually do that, it's facilitated through their Cubular Lending Hub, which is an analytics and AI software platform that's at the core of the commercial lending ecosystem that brings together these small businesses, the lenders, the brokers, the data providers, and the automated risk management capabilities, which we just referenced, for the purpose of making commercial lending more efficient and as a result, more profitable. Now, in terms of the numbers here, really quite impressive for a company of this size. Over 62 financial institutions involved in this ecosystem, 55,000 loan broker reps, and over 70,000 small to medium enterprises which are registered within the program. And this is as of September of last year. Now, in addition to their core lending ecosystem, Tenet Fintech Group also has a number of subsidiaries. So they've got the Asia Synergy Data Solutions, the Asia Synergy Information Technology, Financial Capital, GenX, which is the manager of loan brokerage platforms linked to that lending hub, their supply chain technology, so they're actually getting involved in other verticals outside of just the financial lending space, like supply chain, and their credit solutions subsidiary. So a very well diversified company, again, primarily right now with an Asian exposure that they're looking to expand into North America. So now that we've done a quick refresher on what it is exactly Tenet Fintech does and their business model, I wanted to move into the actual update portion of today's video, talking about the 2021 year-end financial results, along with some operational updates. So you can see Tenet's year-end 2021 audited financial results, confirmed growth trajectory with revenues of $103.6 million. We're actually going to look at their previous revenue expectations and how this lined up for the past fiscal year. Now, obviously the market reacted very poorly to this earnings report. Tenet was trading down about 30% throughout yesterday's session. And there's a number of components within this earnings release that I think are really to blame for that downward move. Now, first off, the company reported revenue of $103.6 million, adjusted EBITDA of $2.5, and a net loss of $48.5 million. And they specifically call out, while the figures shown above fall short of the forecast set by the company for the year, they're nonetheless indicative of the company's growth potential. And that's a key point here, you guys. If we refer back to an article that actually came out July 20th of 2021, we covered this in one of my initial videos on Peak Fintech Group. That was the company's name at this point in time. You can see they actually released guidance for 2021 of $104 million in top line revenue, $5.6 million in earnings for 2021. And if you actually scroll down, you can see this chart here. So here's 2021, $104 million in top line revenue, $5.6 million in net income. And you can see that compares to a net loss of $48.5 million in actuality. And again, they put up an actual adjusted EBITDA of $2.48 million compared to their estimate of $12.5 million for adjusted EBITDA. So this is one of the key problems here, you guys, with companies like this that put out very ambitious annual guidance, not to mention Peak Fintech Group or Tenet Fintech Group actually put out guidance for 2022 and 2023. So if the company is able to meet or exceed these numbers, obviously that's very bullish or could be a huge catalyst for the company. But in the event that the company falls short, which is exactly what we've now seen with Tenet Group, you're going to see a massive move to the downside from the investment community. So it's a very double-edged sword here, you guys. I personally think it's almost impossible to predict out revenue, adjusted EBITDA, and net income with any level of accuracy 2 or 3 years out. As we saw this year and last year with the COVID-19 pandemic situation, things can come up, you guys, black swan events that nobody can plan for. And when you've put out guidance this far in advance, the investment community really holds the leadership team to these numbers. And if they fall flat, you're going to see numbers like we're seeing this week from Tenet, where the share price slides upwards of 30% in a single trading session. Now, time will tell if they're able to hit these numbers for 22 and 23, but they're not off to a very good start in terms of where they actually finished for 2021. Now, with that being said, and as the management team alluded to, despite missing those numbers, specifically the net income, which I think is the biggest red flag for the investment community, we have seen strong growth over the last couple of years. So back in 2018, they only hit 1.7 million of revenue, 2019 about 12 million, 2020 about 43 million, and they were actually able to over double that in 2021 up to that 103.6 million. Now their expenses have obviously gone up in tandem, so $101 million worth of expenses last year alone, which is definitely very steep. We're going to talk about that in a second here. Positive adjusted EBITDA, which was great. This is actually a reversal of what we saw in 2020 where they had a negative adjusted EBITDA, but the big red flag again, you guys, is that net loss of $48.5 million. And they actually go on to specifically call out or talk about that net loss in the footnotes here, number 3 bullet. The net loss for 2021 includes a total $53.3 million impairment charge related to the company's acquisition of Cubular, which is that lending platform, for which forecasted revenues shifted by almost a year due to the delayed launch of the company's Canadian business hub. So what Tenet did was they actually went in, they purchased this Cubular platform with the plans to expand and branch that out into other countries like Canada. There was a delay on launch, and as a result, they had to take an impairment charge, which equated to basically $53.5 million, which represents essentially all of that net loss. So if we actually took the $53.3 million out of the equation, that would take them from a net loss of $48.56 million to actually a net gain or positive net income of about $4.8 million. So this factor alone is an absolutely massive issue for the company, and by delaying that launch, it had major implications to that full year guidance, which they issued in the middle of July of last year. Now, in terms of the operational highlights, still a lot of developments going on at the company here. So they partnered with the e-commerce software provider ShopX. So this is one of the major online or e-commerce players in China. They integrated the Gold River e-commerce and logistics platform into the Business Hub environment. They integrated Business Hub to China's UnionPay network. They created their first virtual bank accounts on the Business Hub lending platform. They participated in the 618 Shopping Festival in partnership with JD.com, which we talked about in one of our prior updates. They opened a number of new offices in China. They closed a short form prospectus for $52 million. They rebranded from the Lending Hub to the Business Hub platform. They closed the acquisition of Cubular Incorporated, again, which is the AI and analytics company and owner of the Business Hub intellectual property, allowing them to expand into new countries. And they signed a major revenue sharing agreement with PetroChina related to the installation and maintenance of automated coffee distribution machines, as well as the sale of coffee at PetroChina convenience stores. So a lot of major catalysts for the company and development over the last 12 months. However, it was really soured by the miss on their numbers, and now the share price is really paying for that in a big way. Now, as we continue to scroll down to the outlook for 2022, the company goes on to say the launch of the company's Canadian Business Hub is the single most important event to look out for in 2022. That launch is expected to lead to a few adjustments to Tenet's Chinese Business Hub. The rules for posting messages, operating a website, and general internet behavior are different in China than they typically are in other parts of the world, which is going to cause or require those adjustments. And considering that the company's Chinese Business Hub will be the first link to its Canadian Business Hub and eventually to other hubs around the world, certain adjustments will need to be made to both hubs in 2022 to ensure compliance with Chinese standards for internet conduct. Now, in addition to the launch of the Canadian Business Hub as the top priority in 2022, the Chinese operations will remain the company's main revenue generator during the year. China was the initial launchpad of the company's Business Hub, which we talked about for good reason based on the size of the economy, and it's now estimated China has over 40 million small and medium enterprises and 70 million micro enterprises or potential customers that could benefit from this platform. Now, in terms of specific industrial sectors the company is going after, they're really excited about the clean tech sector right now, which Tenet plans to dive into in 2022 with its innovative i3060 platform. With China and countries around the world looking for clean tech solutions, makes Tenet well placed to capitalize on clean tech opportunities, which they think could account for as much as 8% of the company's revenue in 2022. So again, putting out very exciting revenue projections that we'll see whether or not they end up coming true. Now, with that being said, despite the delay of its launch of its Canadian Business Hub and shifting of its insurance-related revenue in China, the company has not judged it necessary to revise their guidance for 2022 and believes other revenue streams will compensate for these delays. And they actually say in the intro here, you guys, that they may reverse some of these impairment charges in the future following the launch of the company's Canadian operations. So we may actually see a beneficial or upside surprise with the reversal of this impairment charge during 2022. And as a reminder, Tenet or Peak Fintech is guiding for $305 million in 2022, $59 million in EBITDA, and $36 million in net income. So if you take their current market cap of about $275 million based on that big 30% drop we witnessed this week, and you divide that out by $36 million in net income, you're looking at a price to earnings ratio for 2022, so a forward PE of about 7.6, which is super attractive for a company with this type of growth profile. So time will tell if they're able to hit these numbers in 2022. Obviously a big disappointment compared to their guidance for 2021. However, I feel the management team did a good job of explaining exactly what happened and what led to that miss. I'd be super curious to hear your thoughts in the comment section below. I think if you've been watching this company for some time, this is a great opportunity to accumulate shares. The market has a tendency to overreact, whether it's good or bad news. And if the management team is able to commit and meet these 2022 revenue, net income, and EBITDA goals, I think they should be back on track, and this could be a very lucrative investment opportunity. Again, let me know your comments in the section below. If you're not currently subscribed to the channel, McNallie Money, feel free to do so. And if you're still watching at this point, hopefully you found some value and enjoyed this update. So make sure you smash the like button on your way out. That's all for now. Thanks for watching and have a great rest of your day.